Hello and welcome to Investing Confidential. If you if you think that everything's back to normal because the markets have rallied the last couple of days, I'm sorry. Think again. I don't know where the market's going to go, and if any of these YouTubers tell you where they think the market's going to go, they give you S&P titles. Just shut them off. These people have no clue. All I can tell you is that based on historical 30 years of watching, being involved in markets, trading in markets, when you have this kind of volatility, you are setting up for something drastic. Okay. So drastic could be up drastic or down drastic. I don't think we're going up drastic, but I don't know if we're going down drastic. But I can tell you that when you have this kind of volatility, something is coming. It's never good. Let's put it this way. Something is coming. And it could come from geopolitical, could come from domestic, could be some kind of blow up, but something's coming. And I'm going to show you a trade that you probably can do and make some money. So first, I'm going to talk about what, as I said, I'm going to start everything off like this. Look, this is all that matters, folks. I'm going to keep emphasizing because it's the only thing that matters. There's nothing else that matters. We are in big doo-doo. Okay, the U.S. is essentially bankrupt, but it will never go bankrupt because we can print as much money as we need. But if we were an emerging country in developed markets, we would be in the IMF hospital because this is unsustainable. And I named this video Trump playing chicken because that's what Trump is doing. He's fighting a war on multiple fronts, an economic war on multiple fronts. History tells you can't win. But Trump has defied history before. I'm not going to tell you whether he's going to win or lose. I'm just going to tell you the reality. Okay, and so there are some dangerous things going on over the last few weeks in the U.S. And when I mention about the volatility and something blowing up, here is what I'm talking about. So let's first look at the CLO market. These are basically high yield, very sophisticated, but on the other hand, very ridiculous instruments that were created by Wall Street to basically make money and screw everyone else. CLOs, right? Collateral loan obligations. If there were any CLOs, folks, we wouldn't have half the problems that we have in terms of finance, business finance, consumer finance, leverage. These things are an absolute disaster. Okay? And that market has just frozen. Frozen. There's no bid, there's no offer, there's no liquidity. And when there's no liquidity, that is very bad. Because again, things go, when there's no liquidity, if you got buyers, things can go up dramatically. But on the other hand, when there's no liquidity and you get sellers, things could go real bad. And most likely, the market is frozen because there's too many sellers and not enough buyers. So that's really, really bad. One massive red flag that nobody's talking about. Second here, you've got business conditions. This is Empire State again. As I told you, a lot of these economic numbers are just complete horse crap. But this one is actually okay. Empire State Manufacturing. Again, expected. Okay, these are expected business conditions. We saw really, really bad when we had the peak in the inflation numbers. Now we're seeing below those levels, worse than COVID. Okay, worse than COVID. And I wish we could go back, but I would say we're probably around the great financial crisis. This is bad. Again, expected conditions. And then what's really, if you want to know what's really causing the markets to go down, this is the one here. So what we have here is all these earnings calls that are going on right now and probably to the end of the month. The guidance on these earnings calls is not good. Okay, not good. And this is what analysts focus on and investors focus on. So the warning signs from companies, as you could see here, we've had the worst revision since COVID. Okay, and it's going lower. Again, everything that has to do with COVID lows, I get interested on, right? But we're not there yet. But again, not good. And this is what's causing the market to really gyrate in a not favorable manner. And I've said this before, all of this is pointing to weaker dollar. This is the lowest performance in 20 years in the beginning of the first 100 days. This is a nightmare. And this is the basic. But again, we talked about the administrator wants this. Okay, they need, not only they need a lower dollar, but on the other hand, they need some kind of stability because they got to sell 10 trillion in bonds this year, which is not going to be easy. And if you're looking for a trigger on this volatility, watch the bond auctions. Especially the 7 to 10 year going out. Watch these auctions because most likely one of these auctions will fail. And if a bond, and we've had these auctions fail already, and they've been kept quiet, but there's going to be a pretty loud failure, and that's going to cause major issues. So watch out for that. So let's specifically talk about Trump and what's happening. So this is obviously an op-ed, but it just kind of spells things out. He's fighting wars all over the place. We've got Ukraine, we've got the tariffs, we got China tariffs separate from everyone else. He's fighting the European tariffs. You've got potential bombing of Iran. You've got the Houthi situation. I mean, this is a mess. And he came into office saying he's going to clear up all this mess. And what do we got? We got a big mess. Not taking a position one way or another, but this is adding to all of the volatility and the problems that we're having. And the pressure's coming internally. Ken Griffin, who was a supporter of Trump, this is guy's worth, I don't know, 100 billion, biggest hedge fund around. He's not happy. And that means, and most of the, let's say these finance guys, Wall Street guys who supported Trump, they are now, I don't want to say bashing him, but they're saying this is ridiculous. This has got to stop because it's hurting their business. And you know what? I don't care. I don't care about Ken Griffin. I don't care about Ken. I don't care. So okay, so he loses, his market cap loses 20. I don't really care. Okay? I don't care about Wall Street. Wall Street is part of the problem. So Ken Griffin to me is part of the problem. I don't care what he thinks of Trump. Irrelevant. But again, talk about the pressure. There's the pressure from Wall Street. There's always financial pressure. Where else the pressure coming from? Okay, you got articles like this. China today saying, hey, cancel all the tariffs. I won't even talk to you if you don't cancel the tariffs. Again, the pressure, the game of chicken, as we talked about. So they want a deal, but they want all the tariffs gone. Again, this is negotiation, and this kind of stuff doesn't help. Okay, doesn't help financial markets. What also doesn't help Trump from a bargaining position is you had China recently, supposedly, again, I say supposedly because China's numbers are even more ridiculous than the U.S. They're claiming they had 5.4, they had one of their best GDP, 5.4% in a quarter. Unbelievable. Topping estimates. Okay, that's pressure, right? Negotiating pressure. I showed this last couple of days. Russian ruble, the best performing currency. So you're fighting a war on two fronts. You're fighting China for tariffs, and you're trying to get Russia to stop a war. And Russia's like, look at my currency. I'm strong. Look at my economy. And again, this is all part of this negotiation. Whether these things are legitimate or not, doesn't matter because they're being used as part of the negotiation against the current administration. But there are some things on Trump's side, right? On the administration side, because China, whatever China says, you can't believe anything they say, okay? And the reality is that they're getting hit where it hurts, okay? Chinese factories are shutting down. You're seeing that, and not just, and if the Financial Times which is big time hater of Trump, is going to put articles like this out, you know that things are bad over there because China already is coming off one of the worst, probably the worst financial conditions they've had in 30 years. And, this premier of China, Xi, is under a lot of pressure from the Politburo. I still think he's dead man walking, but that remains to be seen. But this may put him out. Okay, factories all across China are slowing down, and they're cutting people. And when you lay off people in China, remember you're talking about 1.1 billion historically in China. When you have these large numbers of unemployed people, it's very dangerous internally. Okay, so again, look at both sides of the fence. Okay, another thing going for Trump, whether you want to believe it or not, is you've got a lot of these kind of announcements. Abbott Labs expanding manufacturing, Apple, a lot of announcements of companies. Now the problem with this on the Trump side of the coin is it's positive, the announcements, but it usually takes years, 3, 5, 7 years to bring this stuff back. It doesn't come back automatically. Okay, and that's a problem. So in this game of chicken, who's going to win? Nobody. If anyone tells you they know who's going to win, again, just ridiculous. Nobody knows. It's unpredictable. But what is predictable is it's going to continue to cause volatility. So whatever we had come back in the market, you got to look at what has been happening over the last few months. The volatility has been off the charts. The intraday volatility off the charts. And as I said, there's one interesting trade here that I'll show. I mean, I don't know if there's a trade in it, but I can tell you this. This is very interesting to me because anything that touches COVID lows, this is the S&P gold ratio. Gold obviously massively outperforming the S&P, getting close to the COVID lows. That is something to watch. Now, I wouldn't say buy the S&P, but S&P kind of is stocks in general. And again, we could be at an interesting trading level for global stocks. Just based on this ratio, I wouldn't buy the S&P, but certainly there's probably some good quality domestic cheap names, cheap valuation names that you could buy. Again, our preference for stocks is stocks overseas. But again, I think every time something approaches the COVID lows, it gets me interesting because to me that is another one of the big inflection points, maybe one of the biggest inflection points I've seen ever. So to sum up, this is a game of chicken. Trump is going full speed. The rhetoric continues, but obviously we've seen the last couple of days he's backing off on the tariffs, so he's losing the game of chicken right now. But the game of chicken will continue. It will continue with Israel, Hamas. It will continue with Ukraine and Russia. Tariff, Europe. Already he's lost, not lost, but you saw Mexico winning this game of chicken. Canada, I don't know what Canada's doing, but most likely they're going to follow Mexico's path and calm things down. But the China situation, if you think that's going to get settled anytime soon, you're wrong. And so the game of chicken continues, which is not good for financial markets, not good for Wall Street, which is good for everyone else. But again, it's something that you need to know, and that is not going to change. And something is coming. Something big is coming. Again, don't know what it is, but history tells you with this volatility, someone's going to get whacked. Okay, like the mob says, someone's going to get whacked. So coming into Friday, I would be careful because over the weekend there's always crazy stuff. Hedge yourself up, and as always, investors, be careful out there.